morning for this Tuesday, October 29th. And let me just briefly go over the trade that we put on yesterday in UA, the stock, UA, Under Armour. Okay, just to recap what we did here, we saw an inside pattern here. Look at that. The high and the low are contained within the prior day's high and low, right? Back to the 50 exponential moving average, right? The hot pink line here. Went long at $80, right? And 48 cents. 80.48. Initial catastrophic stop 10 cents below the low of that inside pattern, right? And that stop was 78.40. All right, so this is the buy, this is the ISL. Now look at what's happened this morning. The market actually took out yesterday's high by only 1 penny. Only 1 penny penetration, okay? So what I'm going to automatically do here is I'm going to move. Look at the initial catastrophic stop loss was here, right? We went long right here. Our first objective is the 80% profit objective. Profit objective number 1 is 83.26. Right? 83.26 is right here. First profit target. But 80% of that, as you know, once I hit 80% of my first profit target, I'm actually making some money, and I'm going to lock in some money as well. So this is a big level for me, right? That level is 80% of 83.26 because profit objective number 1 is $2.78. So 80% of that would be $2.23 at 82.71. So 82.71 is right there. Okay. But I'm big into trade management, right? Trade management is very, very important. So when I started off the trade, it was a little better than a 1-to-1 reward to risk ratio. But I know that 80 to 90% of the trades that I put on, I'm able to move the stop very quickly. So I'm risking anywhere from half to 2/3 of what my initial risk was. So this is what I'm going to do. Since the market took out yesterday's high, I'm going to go ahead and move that stop up to below yesterday's low. Yesterday's low is 79.95, so I'm going to move it up to 79.85. 10 cents below the low. Okay, and the reason I do that is because since the market has penetrated up through yesterday's high, even though it's only 1 penny, if the market reverses and takes out yesterday's low, I don't want it anymore because that would mean that it would be an engulfing pattern regardless of where it closes, okay? So I would want to be taken out. So just to give you an idea of what this is all about, look at when I first put the trade on, I was risking, my initial risk on the trade, my initial risk was $2.08. Okay? My first profit target, the 80% of the first profit target was $2.23. So I'm better than a 1-to-1 reward to risk ratio, okay? But since I moved that stop up today, okay, again, moved it up to 79.85, this means my initial risk of $2.08 becomes 63 cents. I'm risking 63 cents, folks, to make a minimum of $2.23. All right? That's almost a 4-to-1 reward to risk. 4-to-1, almost. And that's just 80% of the first profit target. First profit target is $2.78. So if you do the math there, 63 goes into 278 over 4 times. So I'm not a bad reward to risk ratio. So now we're sitting nice. We're sitting below yesterday's low right in here. Right? And we're looking for the market to rally up to here. So again, even if I'm only right 50% of the time, but my reward to risk is 3 to 4 to 1, you're printing money. So it's all about trade management. Hope you learned something. If you have any questions, let me know. Bye for now.